Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Good afternoon, everybody. Welcome to Real Estate Investing for Professional Men and Women, podcast for you and me. We're professionals, we're business owners. We own our own practice, and we also invest in real estate. We just do it differently. We do it the right way. I'm not knocking the no money down stuff. It has its place. It's just not every place. So my goal is to help you be on a cash basis as soon as you'll let me do it. If you haven't already subscribed, please go ahead and do so. Podcast is being downloaded in 50 some odd countries, and it's all the channels, Stitcher, iTunes, iHeartRadio, you name it. And also, by the way, very important, if you haven't already done so, go to realestatewithgarywilson.com. Click on the members area. If you're already a member, you go to the left. If you're not a member, you go to the right, and you can be a member for free for a month. Get all the content. Most of all, get access to all of the investor agents. These are real estate agents we certified to work with us investors. We're the only place they can get that from, and we know who they are because we train them. And there's over 3,000 across U.S. and Canada. So do that. It's not just a contact with them, but we do joint ventures together. It's an awesome place to be, and you can check it out for free for 30 days. So in any case, what today we're going to talk about is insurance. And I learned early on in my investing career, insurance is one of those things you got to take seriously. It's not just another expense. It's something that's part of your business model. And if you do it correctly, especially if you own a lot of properties, you can structure your insurance so that you're not only covered, but you may also be able to get rental reimbursement if you get the right kind of plan. And if you're in an area that has, a lot of tornadoes or something, or just pay attention. I've got Sean Harper on to talk more about that. He's an expert in the industry. And so without further ado, first of all, Sean, I want to thank you for taking your valuable time to share with our folks here,
Yeah, thank you very much for having me.
Excellent. Hey, if you wouldn't mind, first off, just kind of give us a quick story about who you are and how you got there. And because I think it'll bring some context to the discussion. I'm willing to bet you got some pretty awesome case studies and stories, which we'll definitely dig into and some advice. But if you don't mind, just share a little bit about, give us all the juicy details.
Absolutely. So I've been an entrepreneur for my whole adult life, and mostly have been starting companies in online financial services. Increasingly, financial services are being bought online, whether it's your credit card or trading. So everyone trades stock online. Everyone's retirement accounts are online. And my last business was a payment processor. And 4 years ago, my business partner and I saw an opportunity to do homeowners insurance, particularly for homes in riskier areas where the weather can be more extreme online. And the thing that creates that opportunity is that most insurance companies were started like 100 years ago. If you think of any of the big guys, Allstate, Liberty Mutual, these are all really old companies. And they just weren't built to run at the pace at which the world is changing. The world is changing faster in every way. It's changing faster demographically. Building materials are changing. The weather is even changing, and the weather's changing fast. Consumer preferences are changing, and these companies, they just haven't changed with the times. And for the most part, they do things the same way they did, 50, 20 years ago. They run on the same software a lot of the times, if they ran on 20 years ago. And in fact, if you go into some of these insurance companies, you'll see there's got a lot of smart people there. And if you ask them what their biggest problems are, it's usually related to the technology. So what we decided to do was to build an insurance company from scratch, like it was a software company. And it's not cheap to do. It's taken us 4 years to do it. And, it's taken, now we've raised more than $70 million from investors, but we've done it. And it has a few really big advantages to customers in the areas where we are. First is it's easier to sign up for. You can do it online in minutes. We do have licensed people that are available for you to talk to. You don't need to go into the local, strip mall. And that's a big advantage. You can buy and shop and compare your insurance in the middle of the night when you're watching Netflix if you want to. And we don't ask you any questions because we're so good at pulling in all the different data that's out there about homes and the areas they're in. We don't need to ask you very many questions. The second value prop is that in homeowners insurance, a lot of the times, as much as 50% of the money that you spend on the insurance policy is not going to pay claims. It's going to other stuff. It's going to pay the agent. It's going to internal operations of the insurance companies. If you go to any city, anywhere, look for the tallest building. It's almost always an insurance company, right? They're spending it on these huge skyscrapers. And what we've been able to do is take that 50 and compress it down a lot lower. In fact, our actual real cost is about 10% of the policy instead of 50. And that allows us to pass a lot of that savings on to the customers. Now, we don't pass all of it on. We keep some for ourselves, which is what makes this a good business. We're able to pass a lot on to the customers, and customers like it. If you go and check out Ken online, most of the people who have used it really like it. And, it's because we're really high tech and because we care really, really deeply about our customers. There's also this thing around, because we're direct to the users, a lot of insurance companies, almost all of them, they have this agent in the middle.
Yeah.
Well, they never really talk to the customers. They don't know them and they don't care about them. They don't even see them as their customer. They see it as the agent's customer. And I think that leads a lot of the times these bad interactions where people are like, oh, the insurance company doesn't care about me. Yeah, a lot of the times they don't. They don't even think of you as the customer.
Right.
We care deeply about our customers. And, even the name of the company reflects that. Like, we're called Kin. Kin means family. And that's because we think about our customers as if they are our family. And we're, really, really into making sure that their homes are protected. And also, and they're protected in two ways. They're protected in that they have the right coverage, and we're able to, something does go bad, we're able to get it fixed really fast and pay them back for it. And then we also get into actually helping the users make upgrades to their homes that reduce the likelihood that something bad will happen. That could be like a monitoring system of some kind. It also sometimes is like actually just like physical things that you do to the home to make it more resilient to the weather.
Cool. Well, I tell you what, that was a lot of valuable information. And one of the things I really appreciate is you're definitely embracing the future. And just everything that's happening right now, it's like the world's changing right in front of us. And it is. And that we've always known these things were going to happen. We just didn't think that happened so fast. So other industries are going to have to catch up. And I think the fact that you're already, on the leading edge or on the front end of the wave, so to speak, positions you really well to grow and expand your business. So so homeowners, one of the things that I'm fearful of is, people, and I'm going to kind of timestamp this webinar here, podcast is that where we are, we're in the middle of this COVID-19 thing. We don't know how long it's going to last, but people are being told, cut your expenses, cut your expenses, cut your expenses. So they may be tempted to actually make a move that might not be the best move for them to make. So what can you touch on that a little bit? Like what kind of things are you seeing, and what are you suggesting to people? Because it's nothing worse than having something happen, a claim, and you don't have that coverage. Number one. Number two is you don't have enough coverage because you try to save a penny. So.
Yeah, I think the way I think about it isn't cut your expenses right now, but actually reduce your risk profile.
Okay.
And that would mean, first of all, let's try not to spend on things that that are optional, but you also maybe even want to increase your insurance coverage. And the reason why is that you're in a worse position, or at least many of us are, with the stock market down and with liquidity down and a lot of people without jobs, a lot of transactions aren't happening. You're actually in a worse position to have to weather something that happened. And this year looks like it's going to be a bad year from a weather perspective too. The forecast for hurricanes is higher than average, and the forecast for wildfires is also higher than average. In fact, so far this year, we've already had, I think it's $6 billion plus loss events that are weather related. And those are mostly big tornadoes. We're not really in flood season yet. It's probably the worst time to have this sort of external shock come, another one right on the heels of COVID. So we're recommending people actually really look at the coverage and make sure that they have the right coverage given the rest of their financial position, which for a lot of us isn't as good as it was a couple of months ago.
Yeah. Well, I tell you what would you say are some of the best money saving tips, like for first time home buyers? I mean, or even how about this? How about maybe touch on that, but also maybe lead into what are some updates people can make to their homes to cut insurance costs, you know?
Yeah, one that I like a lot that we're recommending and actually doing in many cases for our customers
Mhm.
is there's a whole class of automated water shutoff valves that you can get installed in this really cool device that a bunch of companies make them. It actually sits on the main water line of your home on the inside of the home. And they use AI to actually listen to the flow of the water that's going through the line.
Okay.
And it can notice if there's something abnormal. Now, something abnormal might just be that your toilet started running, right? And it's not a big deal. It'll notify you on your phone. But oftentimes, the something abnormal is actually there was a leak in your home, and you're not there. It's especially a big deal for rental properties because you're not there. And the difference between catching a water leak an hour later and a day later and a week later is like tens of thousands of dollars. You know, if you catch the water leak the same day, you put down towels, you turn off the water, you call a plumber. Not a big deal. You know, if it's a day, you might have drywall damage, you might have mold damage. You know, if it's a week, that could be a big problem. You might now have electrical damage as well. And these things can get really, really expensive. This is a cool one because a lot of the times they actually pay for themselves because insurance companies like us will actually offer a pretty significant discount. For us, outside of extreme weather, so outside of hurricanes and fires and stuff, water losses are our biggest source of loss because they're so prevalent. And that's true of most insurance companies. So many of us will offer really significant discounts if you do have an automated water shutoff valve in your home. It's also kind of neat because they can actually tell you how much water you're using, you know, and you know, cutting down on your water usage is good for the planet. It also can save you some money. Yeah.
Okay. Well, I tell you what, it's interesting you said I was in a vacation home several years ago in Vail, Colorado. One of my clients took my brother and me out there skiing for a week because I helped him flip a big building, a 15-unit building. He made almost $300,000. And in any case, we each had our own bedroom, our own bathroom, and these are heated floors. This was a nice place. And my brother came out of the bedroom and he said, "Hey, Gary, I think I got a problem. There's something wrong with this toilet." And all of a sudden we heard this beep, 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 beep. And the owner had installed one of those systems, an alarm system on the plumbing system. It is a vacation home, and there was chunks of time he wasn't there at all. And I thought, that's an ingenious idea. My gosh, it could save you, you know, it automatically alerted an on-site company. So if Mark was not there, they would come and had access to the house to investigate and take care of things. I think that's invaluable. When you mentioned tenants or landlords too, I've had hundreds and thousands of tenants over the years, and I can tell you, you could have a simple leak and they won't tell you. You wouldn't have a clue until you get your big giant water bill, you know. So I appreciate you sharing that. Now, what are some things to consider, you know, when determining the right coverage? Like let's talk about homeowners first. And let's talk about landlords owning rentals because our motivations are different, and there's different levels of coverage. So, homeowners first, what would you say are maybe the three main factors to consider when determining that right coverage? You know.
Well, you know, there's a lot of standardization between the policies. You know, most homeowners insurance policies cover about the same stuff, and so really the most important thing is for most people is to make sure that your home is covered for the right amount. And it's all over the map. Like we'll see it all the time where a customer will come in and they're either overinsured or underinsured because it's an estimate. Nobody knows exactly how much it's going to cost to rebuild your home. You don't know it until you have to do it. And hopefully most of us don't. And different insurance companies will estimate them in different ways, and they're all like really imperfect. In fact, if you go and try to shop with 5 different insurance companies, you get 5 different answers.
Yeah.
And you really know your home the best. And, you know, all the insurance companies are going to have a band in which they constrain it.
Yeah.
But you just want to make sure you really pay good attention to that coverage A band and the ultimate amount that you're insuring your home for, and make sure you're not overpaying or underinsuring.
Mm-hmm.
The other one that's crazy is most home insurance, and this is true of rental properties too, most homeowners insurance policies do not cover flood.
Yeah.
And it is something, almost everybody in the country is at risk of flood, and flood losses are increasing faster than most kinds of losses. This is different than the water situation I was talking about before.
Right.
This is more like, you live near a body of water and it overflows and
Mm-hmm.
ends up in your house. Amazingly, that's not covered by most homeowners policies.
Right.
And they can be really, really big losses. And there are places where it floods every year, and those people for the most part do have flood insurance.
Mm-hmm.
It's everybody else. A lot of the times the coverage, because it's not likely in any given year you're going to have a flood. The policies can be really cheap. To add flood insurance could be $100 a year, $150 a year. It's almost nothing.
Right.
But it does happen, right? And actually, half of the flood losses last year happened outside of major flood zones.
Wow.
So really, like, everybody should have flood coverage, and it's exactly what insurance is for. It's paying a small amount of money to insure an unlikely event that would be catastrophic if it happened to you. So I'm always encouraging people to make sure that they have flood policy of some kind.
Yeah.
Usually it's pretty cheap, actually.
Well, I tell you what, I learned a long time ago, Sean. It was 2004, and this one, there was two hurricanes came through. It wasn't Katrina. It was Ivan, and I forget the other one. Now, granted, I was up in Pittsburgh at the time. Pittsburgh is nowhere near any ocean, okay? And yet the hurricane, first one, came up through the Gulf, up through the Ohio Valley, and of course usually turn east, came right through Pittsburgh and caused some damage, nothing bad. Now, thank goodness I already had flood coverage. I had some of my properties had what's called 500-year floodplain insurance. Like, the flood could happen on average every 500 years. The other ones were 100-year floodplain policies. In any case, 2 weeks later, another hurricane came through. At the same time as another front came through from the north, and it combined and literally dumped right on over it. And people, you probably remember this, it was all on the news. The Allegheny River flooded, homes were flooded. I mean, it was disastrous. And thank goodness I had the right coverage, because that water came up, damaged the drywall, all the floors buckled, ruined the kitchen cabinetry, completely destroyed furnaces and water tanks. And we're talking, some of those jobs were $40,000 to $80,000. And if it wasn't for the flood insurance, and I didn't, with flood insurance, it was separate than the homeowner's policy. It was through, I guess now it's through FEMA. But literally, the adjuster comes, does their own inspection, their own adjustment, they call it, and literally just writes you a check. And thank goodness I had the policies on the properties I needed because I was covered. There was one property that was way up on a hill, and when you know that the storm sewer system was so backed up, it's like the power of pressure. It forced water up through literally, hundreds of yards of pipe, probably half mile, and we're talking an elevation of a few hundred feet, forced the water up in there into the homes and the streets and everything, and people couldn't believe, how can the water get up here? That's why everybody always says, if you're anywhere in an area like that where you have that kind of weather, you still should have at least a fundamental 500-year floodplain policy. And it, like you said, it was like $100 a year or something, incredible. And it's just like, you wouldn't imagine, like people say, well, if the water gets up here, the whole world's in trouble. But you don't realize how the storm systems are designed. Water that creates pressure, and that downward pressure forces water up through the skin of your pipes. Have you ever seen stuff like that happen? I think you're in the middle of the country. Is that right?
No, we actually only insure people in hurricane exposed and wildfire exposed areas. So even though we're based in Illinois, we also have an office in Florida. Most of our customers are in places like Florida and California that are exposed to more extreme weather. And
wow.
Yeah, and that sort of thing does happen often, what you're describing with the flood losses. It's not always obvious who's going to be impacted by stuff like this.
Yeah. Well, I tell you what, Uh, Going forward, if you have any, I'm sure you've seen a lot of situations over the years and different um, stories, but can you think of one that deals like you is are the properties you insure, are they mostly residential, like get 1 to 4 units, or you do commercial too, like a dentist that owns her own orthodontic practice, or do you cover those properties also?
Yeah, we're really good. So a part of the tech that's at the core of Kin
Yep.
is we're good at using external data sources to understand the relative riskiness of standalone buildings,
Hmm.
and they're usually smaller buildings. The tech that we're good at, we're not great. We wouldn't be really useful for insuring a skyscraper. But for a single family home or for a small building, whether it's commercial or residential, the tech is all, it's applicable, right? A building is a building.
Hmm.
And a lot of the times the data sources that are really useful for this are things like aerial and satellite imagery.
Hmm.
Also, there's a lot of data, there's a lot of weather data that insurance companies don't make good enough use of. And there's a lot of data actually coming off of the real estate industry. There's so much data about any building that's been sold recently,
Yeah.
uh, that there's a lot of richness in that data, including the photos that were associated with it.
Hmm.
And so we really sort of scrape all that information in, are able to use that to automate the process of getting insurance for these buildings and make it
Wow.
cheaper and easier.
Yeah. Well, going forward, how do you see that changing the industry? Because I know, like right now, a lot of industries I think are going to be changing with everything we're learning right now, all these new processes and procedures. I know certainly the rubber band will snap back a good bit to what we were doing 3 or 4 months ago. But the reality is, all these processes, procedures we've been developing. How do we buy food now? How do we, take advantage of transportation? Smart entrepreneurs are going to take those newly developed processes and procedures and learn how to build businesses around them. And one of those, I know, like in real estate, there's a company called EXP Realty, and they're a full-blown, full-service company, but they're online. It's virtual, so they don't have all the brick and mortar at all. There's no real estate offices anywhere, and it's a very efficient process, and they're very good at what they do. So that's one example in the industry. But in your industry, what do you see for the future? How will people be able to engage with you and interact with you, and get the proper coverage?
Yeah, insurance is similar to real estate in that it's historically been done really locally, really face to face. And, I think a lot of people are going, and that's not obviously how we work. We're the opposite. Uh, we're in the cloud, and we're, centralized, and we're direct to consumer online.
Hmm.
But I think people are questioning, necessity is the mother of invention, right? And, now you can't meet face to face. You
Right.
can't meet face to face to buy insurance or talk to an insurance agent. You can't meet face to face even to have a claim adjusted. Right?
Hmm.
So you have to do all these things online. And I think it's actually really cool because you see people adapting faster than they were before this happened. And it's actually going to be a big driver, I think, of efficiency and automation,
Okay.
which is ultimately really good for everybody because the more automated and efficient things are, the less expensive.
Right. Well, I'll tell you what. Do you have a? We're kind of getting close to the magic half hour marker. Can you think of anything or a resource that you can offer people? Obviously, it'll probably likely be online, but any special reports, a website you have, anything people can use to gather information? Because right now, that's key. Like, get education plus information plus the right action gives you the right results. And but what can you share with people as far as how can they get a hold of you? How can they learn more?
Absolutely. Our website is kin.com, and we have a really well-read blog and a bunch of useful material there about insurance, in particular about insurance in places where catastrophes happen, where hurricanes happen, where wildfires happen. And the challenges you have in those areas are unique, and it requires some study to really understand it.
Mm-hmm.
We also are able to get people insurance faster and cheaper than anywhere else. So you can do that at kin.com as well. And that's what I would recommend, kin.com.
Okay. Well, I tell you what, I appreciate you sharing. And by the way, I appreciate you taking your valuable time to do this. I know you're a busy guy. You're running a company, and I think I speak for a lot of people when I say thanks for sharing. It's funny. It's something that, it's a vital part of our business as investors and business owners. And yet it's one of those things people, it's like they check it off a list. They think, okay, I got that taken care of and I'm good. And really, they should be reaching out to you probably at a minimum on an annual basis, to review things. So I appreciate making yourself available and sharing your information. And for everybody listening again, make sure you subscribe to the podcast. Also, go to Real Estate with Gary Wilson. Click on members area, and if you're not a member yet, go ahead and check it out for free for 30 days. Cash buyers report, private lenders report, dozens of websites to research people and properties anywhere you are, including, by the way, some flood information websites are out there. How about that? And also just to network and learn lots of free content. This is an education-based company, so go get all that for free and educate yourself, particularly in the case of insurance. So everybody take care of yourselves. God bless you, and we will see you on the next podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.